Well, is the market setting up to crash a little bit further? Let's get into it. We have a lot to cover today, and we're going to have a short time to do it, so let's just jump right in. We're going to talk about the coloring here on the volume profile. We have to talk about these two VWAPs, and then obviously where we might be able to go. And I want to start with the NASDAQ because the NASDAQ's the one that actually broke. So we can see that the NASDAQ actually did undercut Friday, the October 10th level, and we've been yammering on about that for some time. We've been talking about that October 10th level for some time, and then here we are finally with the undercut. And I think that's important to note. As always, subscribe to this channel and click all notifications. Everything that we go over, it's all linked together, starting with Saturday. Let me just kind of rock and roll right through it so you can kind of follow along with what the market's doing. All right, let's do it. So we talked about this when we did the public pre-market today. And I always tell people that even if you can't watch them when we do those live around 8:15, you can always watch the replays. And we talked about these VWAPs and how significant they were. And you can see that. I mean, it's really clear. A matter of fact, I was going to show a clip, but I think this just hammers it home even better. Once this happened in here and hit our level, all we did was just go out there and watch this. And you can see it pretty clean right here, and we'll show it. But you rejected that VWAP. And after rejection, you can also see in here your negative divergence on the RSI. And then we just used Tesla as a proxy to short the market. And it actually worked pretty nicely. So I'll clean that off for a second, and then I'll show you the RSI, and let me show you the trade because I don't hate doing that and just saying that we did it and then you don't say it. But here you can at least see the timestamps on what we actually did in the room. So we shorted it right there with the high day stop, that little day trade. It's just the moniker so people get it. Then you can just see as it trimmed, we just kind of moved the stop down, and then we just kept trimming at levels and finally kicked out the rest around 12:14, which was, we were up about 20 bucks on the trade from there. Went from 24 to 404. Actually, at one point it was under there, and it actually closed under there. But that level's big. Now, if you watch the RSI, you can't miss it. You see the divergence right there? And that's why I always say when people say these divergences don't work, you can just screenshot this stuff and send it to them. You don't even have to say anything, but you can see it right there. Now, if you go back and go, well, why does that matter? And as I always like to point out, there's pain points. So if we get rid of this for a sec, we'll come back to that. And I do think that's important. And we focus right into these levels where you can see where both of those are, the peak VWAP and then that October 10th VWAP, and then you go into the hourly from there. And you can just overlay them and see exactly where they're coming in from, right? So you're actually hitting this one and not that one, right? So we're going to get rid of that one for a second. Now just, get rid of that. That's why I clicked on it. And then you're going to see the November 10th level. So what that's telling you, you already knew that you had a problem there because you hit it before. And you're always looking for those key levels, right? So that right there is telling you that you have a problem. Why? Because everybody that's in from there, that's on average, on their volume weighted, is now underwater. And this is really what we were talking about. Let's clean this off for 1 second. That'll do it right there. Is it that one? There we go. I know I figured it out. Left shoulder, head, right shoulder. We've been yammering about some time and talking about it's not breaking. Well, you finally undercut. Now, this is where it gets interesting because a lot of people are going to go, oh, I got to get out. Maybe you should have held here and you actually did trigger another CTA level. There was one like right in here. And if you watch that, you could see how it actually, once it broke, that was it. We should talk about that too. But we'll drop that right there. Oh, that's going to give me all that. So once we broke that, that was it. And it's pretty clean that you've done the undercut, which is exactly what you needed to do. You needed to undercut this to flush all that. And you can bounce. Now, you have this volume profile, and we talked about this as well. And you were trying to hold it in here today, but you really didn't try it very long. Like, not very long at all. It was like 5 minutes of fighting. You got a little doji there, and then the doji said, that's enough. We've had enough. And they got out. And you tried. I mean, you tried a couple times to hold in here, but it's just not holding. There's a whole myriad of reasons why we could see this not holding period. People are always looking for a reason to sell. I can give you a lot of them in a moment here. But from my standpoint, the question is, what do you do now? And I think what you really need to do is just clean everything off, take a second, and go, what do we have? Like, what do you really have here? Get rid of the RSI and say, what are you dealing with? Well, that is a major reversal. Like, that's a shooting star. Like, that's like the mother of shooting stars. And so you gapped up, and now you have a major reversal. And that major reversal trapped all these people in here and closed at the low. It is very rare that you're going to find yourself in a position here where that's going to be the end of it. Like, it's really rare for that to happen. You could see how that was the July 31st level. We got over, under, over. It hit there again, and now we're here, right? So I think that you have more to go. It's very rare that that's just going to stop. Now, the one thing that was interesting was the amount of volume. So you're at 975, and if you come across here, when these bottoms started happening, they were like 1, 2, 3, something like that. So if you drop from here, and we'll just take a look at that 975 level, roughly. And if we look at those areas, they tend to be areas where you're going to bottom or you're going to accelerate pretty hard, right? So I think that that's where you're going with this. I think you're going to accelerate really hard. You might go flat into the options. Everyone closes their puts tomorrow because everyone's going to hold their puts, right? Because they think they're going to kill it. Then they close the puts and then an hour later we roll over. I think that's what you're dealing with here. So the other thing that you're dealing with here is that you've officially broken the 55 and you've done it in a really nasty kind of way where you popped over it like everything was going to be fine. Like, oh no, we were just waiting for NVIDIA's earnings and then wham, they broke. And I think that's another level that's of importance there. But it's super rare that you're going to break like this and that everything's just going to be rosy and you're just going to bounce right back up. I would suggest that, yeah, you are oversold, but you're not grossly oversold. So perhaps you get some kind of level there. Perhaps the spreads overseas, which is actually what I think it does do. And then that spreading overseas is going to be more of a problem than a blessing. So for me right now, it's still hands off. We've been talking about this for about a month now on why we don't see the market going higher. It's so easy for these guys to sit there on television and talk about this. And we're going to spend a little time on that in a moment here. It's not against anybody, but, everyone keeps saying, oh, the market's going higher. This is definitely going to go higher. And it's always going higher. Is it going higher right now? No, people are getting destroyed. So it's very easy to be, sitting there and be a non-trader and say, oh, the market should go higher and this is why. When you're in the throes of it, it's very different. And if you've been trading for some time, you know that. You know how ridiculous it is to just say, oh, just hold on to it. How's that going? It doesn't go very well, right? You need an actual game plan. So we're going to remove this for a second. And I just want to point this out again. Here you are at that level on the 10th. And then here you are again at the peak of the market. Both levels were rejected. And then you can see right here how we broke that entire volume area, which we're going to just, let's just get rid of it for now, I think. I think that'll clean it up a little bit. So if we're looking at the market, what's this telling us? Well, we haven't even broke yet. You haven't even broken yet. So, and that means that this probably does break. And you have the same left head, right shoulder now, and you have the same levels here. So the very first thing that you're going to want to do and get above is this, right? That's the very first thing we're going to want to see. Can we get above that VWAP, right? And I don't know. I don't know that you're going to be able to get above it. We're just going to drop that there because that's really where it should be. But that's the very first one that you should be focused on. We're going to clean this off. And your very first movement here on the ES is just getting above this VWAP, which puts you right around 66.30. And, that's going to be a pickle tomorrow unless you get some kind of news or world peace overnight. And what you have is you have a monster head and shoulders. So if we look at this monster head and shoulders and click it, then we go left shoulder, head. The problem with this and why this can get so nasty is because the right shoulder is bigger than the left shoulder. This is one of those like weak trout-like shoulders that people don't like. And this is like one of those big manly bodybuilding shoulders. The bigger the right shoulder versus the left shoulder, when these things break, the more powerful the break. Now we could talk about that it's got to do with tariffs. I think it's got a lot to do with uncertainty. The fact that you don't have data. Now that is 5.8%. You always measure the percentage from the top of the head to the neckline. That's your neckline, not here, not here, here. The bottom of it is the neckline. So you'd have to go here and then you'd have to drop it 5.8%. And let's see what that's going to get us. But I think it's like 63 or something. But let's just drop it down. Might not even be that far down. No, it's further. So that's going to get you to 5.3. It's going to get you to around 6181, something like that. So say 6,200. And people are like, oh, that couldn't possibly happen. Guys, the market used to correct every 18 months. Every 18 months, it used to correct about 10% for no reason. And people would just say, oh, or, it doesn't do that anymore. Okay. So if you looked at that level, this took you down to about 6. I mean, people are acting like this is the end of the world. It's kind of crazy. That's a 10% correction if that happens. So that is not out of the question. Now, the problem with that is people don't understand what the rule of 3 is, which means if this drops 10%, then a sector is going to drop 30%. And one of the names in the sector is going to drop 90%. And that's when people start realizing that they own RGTI, right? And they're like, oh, geez, what do I own? Nothing. You own nothing. You own a company that's in a strip mall, right? So when you start going through that, there's a lot of froth that's in the market. I was joking around today with OKLO, about people loving the name and that there's no revenues with it. And we were actually joking around on the pre-market, and I stated that I was shorted through this OKLL. Now, when something moves this strong and I am short it, I do tend to close it, and I did close this. But some of this stuff's vicious, and that's not going to stop. So then you have to go through this and say, well, what is this really telling us? Well, it's telling you that you're breaking down, and it doesn't mean that you're breaking down forever. but you're breaking down. Now, why are you breaking down? Some people said, well, they went through the Oracle conference call and that was bad. They went through Meta, that was bad. They went through NVIDIA, and NVIDIA was really bad because inventories were up. Well, no kidding, inventories are up, right? Because they're finally able to get product. But the product is there, and they raised revenue. I don't really care what NVIDIA does here. I don't care if it goes from 170 to 180 to 150. Like, the idea that people are not going to buy this is kind of ludicrous. So it's just a matter of time. But on days like today, you do the same exact thing. And this is exactly what we talked about. And again, we did this, the pre-market. And I think it's really important to get that because you can listen to those calls and there's a lot of value in them. For me, I would strongly suggest that you wind up listening to those. You could see that the call wall was up here at 200 last night. We were pretty vocal about this when we did that publicly on the live stream, that this was your area to watch. It played out textbook, like literally textbook, where there's the open, rallied back to the open. I actually went long here in case it broke out, because if it broke, I thought you were going to push back up to the call wall, and then it just faded. And the moment that faded, I'm like, I got out of the way and that was it. And we had all these shorts on, different shorts, different names. But I think it's really important to get that. Like, once it fails the open, it just means the people at the open have changed their mind about owning the stock. Like, it's not rocket science. And if they change, do you think the new people here are going to keep? They're not going to want to hold either. And that's usually where you have the most volume, right? So if the people at the open change, it just kind of makes sense that the stock might be having a bad day, or at least it's got to be, choppy until it figures it out. So the question is, what does this do now? So if we take a look at NVIDIA and we clean all this off, there's no way in the world that you can look at that and say, oh, I need to get involved. But I don't know why people are surprised by this, considering, and I went over this in the other video last night and the day before, for the last 6 quarters, no matter whether it's crushed or not, this is what you get. And you always get these kinds of moves. It's no different than what you got here Thursday, February 27th. You opened at 135 and then you were at 119 and nobody was ever going to buy a chip again. Now it's at 180 and no one's ever going to buy a chip again. Okay. I mean, it's no different. It's literally no different. Here's August 29th. Now, someone's going to comment, it's different because of this, and I know the inventories. Okay. And costs are up. Okay. So what you want to do here is study this stuff and understand it and then make a decision. Maybe you're right. Maybe AI is dead. I don't think it is. I just think that you're going to go through a period of correction where they're going to get rid of the garbage. And I also think you're going through a period here where people don't want to play around anymore. And I think that's more what you're dealing with. A lot of people are talking about the Japan carry trade. Is it an issue? If we think it's an issue, it's usually not. People all of a sudden are looking at this, same people that were looking at the repo and saying repo is an issue. Now it's Japan yen. I personally think what you're dealing with is massive uncertainty. You had non-farm payrolls. And if you go and look at non-farm payrolls, let's do it this way. So the street was looking at like 50. I think JP Morgan was at 50. Non-farm comes in at 119. They do all these forecasts previous and then they revise some things, right? And then while they're telling you that the high non-farm payrolls is up, unemployment rate spikes. Hourly earnings are up. But unemployment rate spiked and the claims are here. I actually think they were better off if they were going to put data out that made no sense to not put any data out. Because it's really hard for them to explain why non-farm payrolls is actually greater than expected by why less people and the unemployment rate is ticking up. Like, it just doesn't make any sense. So there's a lot of explaining to do. And I think people are looking at this. And at the end of the day, I think they're like, you know what? The data's a mess. The data is going to be a mess for the rest of the year. We have the Fed. Are they going to cut? Are they not going to cut? They're torn. We know that from the Fed minutes. What else is going to drive the market here? Like, what's going to drive us higher? And I think that you're just getting to the point of exhaustion between these tariffs that we don't know what we're going to get. That's another issue that we're dealing with. And all these tariff agreements we're supposed to have by Thanksgiving that we just don't have. So instead of dealing with any of it, these guys are killing it. I keep hearing that people keep saying that hedge funds are not doing well. I would go to an actual source where they're showing you what they're doing by out there, just so you get it. Like, some of the top ones, like Ackman's double digits, multiple, I think he's like 26 or 27%. And he's long short only. Macro side, if you look at Dalio's fund, I think he's at like 27 or 28%. So like, if they're doing that on the macro side and Ackman's long short US equities, which is what he is, then the majority of people usually fall in line somewhere in that, right? That range. So, but you can go look it up yourself. I think it's like 1,400 funds are up over, 500 basis points over the S&P on the year. It's insane. It's like their best year in a decade. So I don't understand when people are saying that they're chasing what? It doesn't make any sense. Anyway, so I think they're getting out. And again, you have this pattern and you want to watch this. The one thing I would just say to you guys, you want to do your own due diligence here. When you start seeing things crack like this, don't go look for confirmation bias. Don't go look for the guy on CNBC that's going to tell you it's going to be okay. It's not going to be okay. If you have a stop and you have a process, honor the process. None of this is going to be okay, right? You're coming in hard, honor what it's doing. Don't tell yourself it's doing something different. When you're watching Bitcoin fall apart and you don't see support until like 75, which there is no support until 75, don't tell yourself that it's going to miraculously hold because some guy comes on TV and tells you that, oh, this is a great time to buy Bitcoin. Him first. You go first, right? Just remember that. When these guys are speaking, they get paid to sell their book, and that's what they're doing. So, but here you are. I think that gets to 75, and this always gets me where people don't think like this, but I would suggest that you do. If you really liked MSTR and you really wanted to buy it, like if you were really crazy about it, when this thing comes down, let's say it gets to that 109 again and it blows up, like long term, you want this. If you believe in Bitcoin and you believe in this stuff, you want this stuff to blow up so that you can get involved with it. You don't want to put yourself in a position where you're paying up here when you could pay here. It's the same thing with any of these names. If you believe in Oracle and you think Oracle's a great company, why in the world do you want to pay 340 when you could pay 200 or 170? It just doesn't make any sense. Of course you want them to drop if you're a long-term investor. If you're swing trading, it's a different story. And if you're swing trading, you cannot be looking at this market right now and saying, oh, we're going to hold. Now, here are some things that you can watch tomorrow. The first thing that you're really going to want to watch is the S5FD. If we're going to bounce, and I only have Wednesday's close because it's not out yet, when this settles, when we bounce is when you get to these single digits. So if you come in tomorrow, when you look at this and this thing's roughly at that level where, you're at that single digit level, like October 10th, and you get down to the single digit numbers, you're due for a bounce. When you get to about 90% of all stocks are below the 5-day moving average, you're due for a bounce. You're at 75%. You are not due to bounce on that. But if you did something as simplistic as went down here to the 10 range and looked at anything around here, October 10th, or you looked at May 22nd or April 7th or 8th, which we know what that is, or you go down here to the 19th, you'll see that you'll have some massive bounce or some massive move. That's exactly what you're looking for. And I think that that's really important to get. So that's where I would be going. Is there opportunity out there in markets like this? I think there is, but I think it's very different how you view it. So for me, it's things like this. When people want to blow out of everything, they'll sell these kinds of companies where you already know that Paramount put a bid out there for, 23.5 for cash. So you know that you already have that bid out there. They could always pull it in a bad market, right? They could say, we're going to avoid it because of market conditions. That's always a possibility. We just saw that with PZZA, right? Where they got pulled because of that market conditions. Apollo walked away. I don't think that's going to happen here because you have multiple bidders. But you know where your floor is. So when this thing gets smoked on days like today or the other day and it's down, you know that you can have some other guy come in here and have a competing offer. And you saw this the other day with AVDL as well, where, at 18, and we actually bought this for a swing, and then it got bought out, and then it was like an extra $1.50 kicker, and then someone else came out and said, well, we'll give you 21.5 plus the kicker. That's why it's at 23. So these kinds of names, that can happen. And then what I would do is I keep looking at the biotech names. Now, if they're going to smoke everything, they're going to smoke everything, and it's not going to matter. But I think biotech looks really good here. The other concern I'm still trying to wrap my noodle around is this. And this is something that, and I'm not saying I have it all figured out because I sure as heck don't. 27 years of doing this, I still don't have it figured out. But I'm going to leave you with this. XLRE looks god awful. And it's not because of the New York mayor that all of a sudden they're selling New York and all this other stuff, right? There's other reasons why this is happening, but it's everywhere. And these real estate investment trusts, they look god awful. And it doesn't matter where they are. They just look awful. And they tried to rally mid-September. They sold off. And since then, it's just been a dumpster fire. So keep that in mind. There is something out there. BlackRock did come out, by the way, and they have a fund. And this is important to note. It's probably one of the reasons why it dropped. They went out there and cut their fees on the fund. It's a private credit fund because it's doing so poorly that they're not going to take either the carry or some other thing that they're entitled to. And I think that's very important for people to get. If that's out there, then maybe there's a private credit issue that we have to look at. So I keep looking at Apollo and looking for cracks, or Blue Owl, which is also in that business. And you can see Blue Owl just keeps trading down like a pig. But I think that that's where your head has to be. Like, what is the other thing that's going to clip us? And I'm not saying you have to rush into these names, guys. I hope you're getting that. But there's a difference between a correction and a pullback that presents opportunity and the end of the world. And I think that you're getting a correction and a pullback that, 6 months from now, you're going to be very grateful, very similar to what happened in April if you had your list ready and you were prepped for it. That is it.